Good afternoon, sir.
Yo, yo. This is episode 64 of the Beef and Bitcoin podcast with your host, Brett and CH. Today's topic, I figured we would do like a 2019 year in review here. A lot happened throughout 2019. You know, we bottomed and popped out of the bear market, and now we've been going down for the last couple of months since the summer. People have gotten shaken out of their positions. We've seen new Bitcoin companies launch. We've seen the global macro space just completely go insane with Hong Kong, Iran, Venezuela. Just so much has happened, even with the censoring of people buying gold. There's just been a ton that has happened, and I thought it would be a good time to kind of just recap and give our takes on what happened throughout all of 2019. But other than that, man, how was your New Year? How was your Christmas?
Oh, it's been good. It's good to see family and friends, and just now it's over. It's back. More focusing on what's going on. I feel like I took kind of a break, definitely from Twitter for sure, and just news in general, which was nice. But now I'm kind of back in that cycle again, especially with the Iran news. It's like, okay, what's going on here? So it's kind of big, kind of a big deal.
Oh no, totally. It was not something I was expecting at the very beginning of the year, but I mean, it seems like it's now like it kind of makes sense. Like, of course, something like this would happen in 2020. So,
Yeah, start of a new decade, and
right.
the memes are just. I'm sorry, but the memes for this whole thing are great. I don't play Fortnite, but let's drop, or what's that? I can't even think of the term right now. Where are we dropping, boys? Type of thing, memes over
Yeah.
Iran, or like the Snapchat map with people all in Iran, like getting drafted, are just
Yeah,
hilarious.
like the World War III meme
If
really
if
blew up in
if
the
it
last
doesn't,
couple days.
yeah. If I mean, like that's like the peak of times, man. People joking about World War III.
Yeah, definitely. I mean, it's insane, but at the same time, I would expect nothing less from the internet to meme exactly what's happening. Uh, to get started, I kind of wanted to start from what I think the beginning of the year really brought, and that was the stacking Sats meme and earning Bitcoin. And I forget when that really started to take off, but I want to say it was the beginning of 2019 when at least I remember seeing Matt Odell tweet about that, and it just kind of really took off. And I was saying it a lot in my stories and making stacking sats memes, and basically, I don't know. To sum it up for those who don't know what stacking sats is, it's pretty much just your dollar cost averaging on a consistent basis, and stacking sats for the future or whatever. And it really took off, and I think it also grew a lot from the earning Bitcoin companies and the Bitcoin backed companies such as Lolly, Fold, and Pay. And I know we've talked about Lolly and Fold and Pay on previous podcasts in 2019, but I'm really looking forward to watching those Bitcoin backed companies grow in 2020 and beyond. So in 2019, we saw them launch, and I had a great time using Lolly for my online purchases to get Bitcoin back, and using Fold to buy gift cards at Target, Amazon, and other places where I typically shop anyway, and start getting Bitcoin back with that. So I don't know. What do you think? Do you think the stacking sats meme really took off in 2019?
Yes and no. I mean, I saw it on Twitter, definitely crypto Twitter. But then again, like I feel like crypto Twitter just continually is just dying throughout the year, more and more and more. I mean, I feel like we continually see a lot of people just rage quit crypto Twitter in general, which is usually a good bottom sign. But getting back to the stacking sats, I remember being kind of popular at the start of the year, and in that sense, like people. But haven't seen it as much lately. But maybe that's just because I've been on Twitter less. So.
Yeah, no, I definitely think it's died down, and I even now that you're bringing it up, I noticed I stopped saying it as much closer to the end of the year. And honestly, you might be right. It could just be fatigue, like Bitcoin fatigue, right? Like everybody dealt with the bear market for pretty much what, like 2 years. I mean, it was a long time from end of 2017 and then all of 2018. And then in 2019, we finally started to show signs of life again. And we did so many episodes about sentiment and emotions coming
Yeah.
back. Like in the summer
Well,
of 2019, I mean, it was everybody was loving it. We were pumping to 12, 13, 14K. I mean, just making these absolutely unbelievable moves to the upside, and everybody's emotions just kind of went wild. And then, of course, we dumped because we really skyrocketed in just a couple of weeks, and now people are fatigued again, right? Nobody cares again, and I think that's kind of important to understand. And I think you
sentiment.
nailed it when it talks about the sentiment, and it's a good bottom indicator when
I mean,
there's only yeah.
no, I was going to keep going. You're saying good bottom indicator, but I was going to say that this has been a grinding like bleed here. It's
Oh,
like
the second
there's
half of 2019 was just a mess.
literally it's been a grinding bleed for Bitcoin. Doesn't mean it doesn't go up, and but like as you can look at this chart, it's just kind of you go up, dump more, go up, dump more. So that
Yeah.
definitely shakes people's hands.
Yeah, it's totally just exhausting. And I even noticed that the engagement on the crypto humor page and the orange coin memes page is just it's dead. I mean, you know,
Mm,
I went from in the summer getting 100 plus likes every meme to now it's like four or five comments and like,
yeah,
300 likes. I mean,
as I
people
said, that
have
was a big drop.
yeah.
I was like,
And
that's a rough drop, 100 to 4.
yeah, I mean, you can just see the engagement and the sentiment just really die down.
Yeah,
And I think on one hand, it makes me remember a couple things. One, price absolutely drives adoption because you can see it in the emotions. Because when the price is pumping, the likes are coming, the comments are in there, people are liking more
talking about
tweets and
it.
stacking sats, and then when it's not pumping, nobody. It's just like everyone forgets about it. So I think that's where you can really start to like it gives me confidence in the price drives adoption. So like number go up is the most important thing because that's what brings people into the space. And I think 2019 really showed me that for sure.
Yeah, it's we've talked about it the whole year. It's with anything. It could be gold, it could be oil, it could be
Right,
price
right,
drives adoption. And I guess oil you say a little less, but still, it's the same thing. You could apply it to antique cars, antique, you name it.
right.
And it's this craze. Obviously in 2017, when you look at this chart, it was ridiculous. I mean, no one, like, I remember people making calls for 8K being the top, and like, it definitely possibly felt like it, and you didn't think things could get more ridiculous, and then it did. We went from, or that's the September. So we went from that 3,000 bottom. I mean, this is all 2 candles, but still, I mean, it was a rocket ship for like 3 months. It was absolutely insane, just nonstop,
Right.
and it
And now
just drew in everyone. It sucked in everyone.
yeah, I have a feeling we'll see that again, when the next bull market comes around, and it'll be funny to see either the same people who disappeared from Twitter come back,
We're
or and like all the new people, right? You'll know as soon as the text messages or whatever start coming in, or your parents reach out to you and ask you what's going on with Bitcoin now and all this stuff, and
Ty
that's when
Lopez.
yeah, Tyler, exactly, like that's when it's starting to come back.
Yeah.
So one of the other things that happened in 2019 that I think is kind of important is the nodes in a box. And when I say nodes in a box, I really mean people and Bitcoin are starting to run their own full node and validate their own transactions and start playing around with the Lightning Network really grew. Um, I don't think it grew as much as everybody was expecting or wanted, but at the same time, there wasn't a lot of development around running your own node and doing all that stuff. So we saw Casa start, right? And they have that like a Raspberry Pi node in a box solution where you just plug it into your router. It allows you to do a multi-sig setup on your Bitcoin for increased security over like a single private seed or a single key. And Nodl started there. That's another, node in a box that allows you to run your own node and run a Lightning node and run Electrum and all that stuff. And then you saw all their desktop software like My Node BTC, which is actually really cool. You can run it on a cheap laptop. You can run your own full node. You can run a Lightning node. You can run over Tor and spin up like a BTC Pay server. Really cool stuff. And I think it didn't get a ton of adoption in 2019, but I think that's okay because you need those foundations to kind of be built out. And I was actually just listening to a Peter McCormick podcast where he was saying like, running a node's just like too hard. I'm not going to do it. And I took that leap in 2019, and it's really not that bad. But I think it's important that these businesses start growing and start trying to build and ship products so we can see if there's actually demand there. Like you need that free market to kind of come out, and the market will tell us whether or not people are actually going to run their own nodes. So I think that's a good thing to think about. And if even take someone like yourself, like, do you think running a full node is a project you would take on in 2020 or in the future?
I was just about to ask you this. I was like, because you know better than I do. Is there a major benefit to running a node? Like, because even if it's just a little bit of work, like, just answer that to me. Like, is there a major benefit? Like,
So yeah, so the major benefit of running your own full node is that you validate your own incoming transactions. So in other words, when we talk about like that common saying, trusted third parties are security holes.
yeah,
So if you're relying on Coinbase as your wallet or Gemini or an exchange, you could be locked out of your accounts, and that could be the end of the day. And to take it a step further, let's say you're using a Ledger or a Trezor, and you're not running your own full node to validate those transactions. You're just going to, Trezor.io, you plug in your hardware wallet, type in your PIN, and then boom, you see all your transactions. But you're trusting Trezor or Ledger that all that information is accurate, and you actually have the keys to that Bitcoin. Whereas if you run your own full node, you are self-validating your own transactions. So you're getting rid of that trusted third party piece by running your own full node. Now, with that being said, some people would say, well, I don't care. That's not really much of a benefit. I'd rather outsource that to Trezor or Ledger or whoever. I'll let them do the validation for me. And it's a big debate with people who just don't see the benefits in running a full node. And I'm sympathetic to that because I think at this point in time, it still might be slightly too technical for some people, although like in the grand scheme of things, it's really not that bad. I mean, when people wanted to get on the internet, you had to learn how to install your router, plug it in and get it all working, or else you couldn't get online. And that's still the case today. So I think there need to be enough, either like a killer application where like you have to run a full node in order to benefit from it, or you need to, in order to have a multi-sig solution like a 3 of 5 wallets to secure your Bitcoin, you have to run a full node. Okay, well, if number goes up to say 100K and you have one Bitcoin and you're like, holy shit, like I have 100 grand worth of Bitcoin, I better secure it a little bit more seriously than just on one hardware device, there's all of a sudden there's incentive to start running a node. Or if you want to do a certain application that doesn't exist today, or maybe like a Lightning app for gambling or something, and the only way to be able to participate is run your own node, then people are going to do it. So I think we're still in that in-between period where there isn't enough incentive, or you don't get that added utility of running your own node yet because there's not enough applications out there, or the price isn't high enough to warrant running a full node. And that's kind of my take on it.
yeah. I was gonna go with along the lines of what you were talking about the internet earlier. Like, obviously, the internet in the early '90s, doing email stuff like that was much more complicated than it is now. And you think about like early people like cyberpunks, etc., being on there like in '93, '94, before a lot of people went on. And you can apply probably the same thing in terms of Bitcoin. It's going to take a while. It doesn't happen overnight. And I think the ease of just being able to send it and use third party, especially if you're not in the same area all the time, makes it a lot easier, I think. And that's just
Definitely.
if you're like, and that's just my thoughts. And if you're not doing a lot of transactions, is it worth the hassle for yourself? Most people, they probably don't see the benefit. It's probably they don't see. And now this may change over time, as you were saying now with like the modern internet routers. That might, if that became the case, if that was necessary, people realize maybe 10, 20, whatever amount of years down the line, people are like, holy shit, I want a console node fucking 50, whatever,
Right.
is,
Right.
whatever it is then, if it's important or people see the value in having it.
Yeah, I just think there needs to be that, either that killer app or that thing that you need in order to Bitcoin, right? If
Yeah,
To me it's like, if I want to get on the internet at home, like I have to have my router and all that stuff set up, or else I can't get on. I can only use the internet on my cell phone, and like that's not that great. That's good for basic web browsing or whatever else, but maybe that's not enough for Netflix or whatever else. Like you have to have that solution. So I think if people were like, all right, I want to Bitcoin, whatever that means, and you have to run a node in order to do so, and it was, maybe it's embedded in routers in the future, or something else where it's not as much of a hassle, then that's when I think it will start to go a little bit more mainstream. Or when people will start running their own node is if there's some sort of compromise, with a hardware wallet, or using Coinbase or whatever, where people just realized they were getting fake Bitcoin the whole time, and they're like, "Shit, I really wish I would have validated my own transactions, and I was sent fake Bitcoin instead." Because the only way is if you validate for yourself, and that's the trust but verify, right? So you can trust Trezor or whoever else all you want, but you really want to verify that information yourself. So it just the costs need to be, either low enough, or the demand to self validate needs to increase. And just as we said before, people don't think they need Bitcoin until their fucking PayPal accounts
exactly.
frozen and they're kicked off of all of social media, like they don't exist anymore. Like then you need a bank that works outside of the financial system, and the only one that exists is Bitcoin. So
Yeah.
that's when the demand starts to increase. So I still think we're in this middle ground where you have people like you and me who are like, all right, well, I'll play around with this technology, and because I want to be able to help people onboard them as the demand
Well,
increases.
I think you and I think longer term, and we're like, okay, what's this going to be in 2030? Like,
Right, exactly.
and you think about 2010, like social media, sure there was Facebook, but it's not the same with like going viral didn't start happening till maybe late 2011, 2012, really in 2013. That's when things, and by 2014, and now it's so easy for things just to go viral like overnight because it gets retweeted 2 million times. And then it's, on every, news channel and everyone sees it. TBT to fidget spinners.
Oh yeah, dude, that's a good way to put it.
I mean, Jules and those fucking Sorens are a perfect example. Like Jules were nothing, and then they fucking exploded like overnight.
Right. And all that happened just so fast. And yeah, I think Bitcoin and the other things that, work with Bitcoin will happen the same way. If like, let's say, I think personally, like gambling and gaming will be end up in hindsight looking as like, oh, those are pretty obvious Bitcoin, things that Bitcoin enables. Let's say like, betting gets really big and you have to run your own node in order to participate. Like that's when people will start to do it. Or to play a certain, like a first person shooter game where you need to have your Bitcoin on there in order to bet with your friends and play, like that will encourage people to do it. But it's not going to happen until then, and in the meantime you need people to do it, to test it and figure out what the best user experience is, or else it's not going to happen. So I think that's where like people like you and I come in, so we can kind of, people can outsource that to us and we can learn about it, shoot the shit about it, talk about the pros and cons, and then people can decide for themselves if that's something that they want to do.
Yeah, it's again, it's a demand thing. At the end of the day, broken down. If you want to just break it down to easiest, it's demand. And
Right.
currently, right now, there's not much demand for Bitcoin, and the people who want to own Casa Noodles already own them, and the
Right.
other people don't know about them because there's not, it's not Bitcoin's not going crazy right now. And although it's still like we talk about it all the time, it's like Bitcoin's still like ridiculously
Small.
small, and it's still the price is still like Like a couple of years ago, like 2 years ago or whatever, in 2017, people would be going crazy because it was at 7,000.
Yeah, yeah, right.
And
It's at 7,000 and nobody cares, and
nobody
it's up
cares.
100% for the year or from 2019.
No, literally,
Yeah,
it's up 100%. I mean, literally, when you see them talk about it, it's like the best performing asset of 2019.
yeah. Oh yeah, and it was the best performing asset of the decade too, which is also like it's I understand that it's still easy to dismiss that. Like that's just a fact. Like Bitcoin was the best performing asset of the decade and the year. Okay, that's great, but it's funny that that could be factually true, but at the same time no one also cares. So I
Yeah,
find I find that very interesting, but it also tells me there's a lot of asymmetric information in the economy. So you and I might be able to recognize that and say, okay, well, maybe I want to allocate capital to Bitcoin because it's a misunderstood asset. And in 2025, after the halving after next, people will be saying like, well, it was the best performing asset from 2010 to 2020 and nobody said anything. And I wish I would have known then. Why didn't anybody tell me? Well, people did, but you didn't care at the time.
yeah. I was just checking to see how close Litecoin was in terms of the performing asset of the year, but it's not. I mean, in the first half, yeah, it did a ridiculous run, but I was just curious
Right.
to see where it went.
Yeah. Uh, so one of the other things that happened in 2019 that I wasn't expecting was the repo market, and we started talking about that. I guess
It's
whenever
so
that kind of started, was it maybe
complex. It's like
like
it's
September
basically no one
timeframe?
can
I mean,
understand it.
yeah, and it's funny because a lot of really good articles were written about the repo markets, whether it be from Caitlin Long or Trace Mayer talking about it, or even Zero Hedge. And it's funny because it wasn't mentioned very much on mainstream outlets, but everybody kind of glazed right over the repo markets and the fact that the markets essentially looked like they were going to freeze up unless liquidity was injected into the repo markets. Um, so let's say today's January 5th, between and from the next 10 days, starting from December 15th, around there, the Federal Reserve will have pumped $500 billion into the repo markets, which is absolutely insane. And that I want to say that's close to all of the quantitative easing that was done just in the 2008 financial crisis. So we've already blown through the same amount of easing that happened in 2008 to try to steer us out of a recession, and now we've blown past that number, and it's like nobody cares. There was no voting on whether or not that was a good idea. It just kind of happened in the background and didn't get all that much attention. And I think we were talking about this at the end of 2018, how it seemed like the world was ending because the markets were dumping, and then the
The Fed
market
flip
went
flopped, and
right. The Fed flipped. They started cutting rates again,
and
and
a
and
lot of other central banks too. Like, it was basically everyone flip flopped and was like, okay,
right. We saw negative interest rates. We just saw a lot of crazy shit, and I think now in hindsight we're going to be able to point and look at the repo markets and negative interest rates as the tools that central banks around the globe are using to try to steer the global economy out of a recession, or at least try to prevent one. And that was just such a big thing that happened in 2019. What do you think about that?
so I was going to go off what you said earlier about the financial crisis. You said the repo was roughly what half a trillion, so 500
Hmm.
billion. So in 2008, because it was almost 2009, I don't know, like October or whatever, late September when they passed TARP, which was Troubled Asset Relief Program, was 700 billion roughly. So if you include we went from the Fed balance sheet went from 3.759 trillion to 4.173 trillion. We've basically done what happened in the financial crisis over the past 4 months, if even.
Right.
It's
Not a
not
lot
even
of
four
time.
months. Yeah,
Yeah.
it's basically 3.5 months at most. So
Yeah.
it's
I mean, it's insane. And
yeah,
nobody even like that's not mentioned at all. And all we're seeing is, this is one of the other topics is the global markets are just making new all-time highs. And it's certainly not a function of performance, whether from like company performance or earnings performance. You've had stock buybacks that have exploded. You can borrow cheap money, buy back your own stock, and make your earnings per share look better or improved when in reality sales are stagnant or decreasing. The economy isn't really growing as much as it looks like it is, and it just it makes everything look so weird and toppy. And when you wrap that Bitcoin macro, landscape around it, it's just really interesting to look at where Bitcoin kind of fits in this weird global macro quantitative easing or not QE space that just keeps happening.
Yeah, I was trying to find there's a good chart for it, but here's a buyback spending one if you're watching on YouTube, and it basically buyback spending. The figure projection for 2019 was it 1 trillion or was just shy of 1 trillion, but it was the highest ever, by far. And the big thing was in the past decade, basically since the financial crisis, the only net demand for stocks like shares has been from, you guessed it, share buybacks that have only been legal since 1982, and they were illegal in the mid 30s. I want to say 34, somewhere around there with either with an SEC act or something like that. It might have been 38. But long story short, they were illegal for a reason because they realized in the 30s after the crash of 1929 with the Great Depression, they're like, holy shit, how much chicanery, I'll say, was going on then, with companies buying back their own shares, probably back then placing bids, then making them disappear, etc., placing asks, making them disappear, just stuff like that. But basically buying back your own shares, the easiest way to put it is it supports, one, you always have demand for your shares, so people can dump and your people are buying and you don't really care about the price. And it's kind of a big deal because it's like pensions, endowments, institutions, retail investors, you name it. There's been no net demand over the last decade. It's been net selling.
Right, and even a lot of the demand that is there is from Vanguard 401ks and all passive investing.
Yeah, so passive investing bubble, perfect example.
No retail person is like sitting and buying stocks. Like I asked a coworker the other day, I was like, tell me the truth. Like, when was the last time you bought a stock? And he just looked at me. He's like, yeah, I mean, I guess I haven't. He's like, I bought a little bit of Bitcoin. I'm like, that's kind of my point. Like, stocks are pumping, but nobody in reality is buying. It's just right. It's just algos, and it's your passive Vanguard funds going in every 2 weeks. It's buying for you. So it's almost like there's a weird misallocation of capital, and it will be in hindsight, right? Like, I mean, I was wrong to talk about this like a year ago or whatever, like at the end of 2018, thinking, all right, like finally, like the crash is coming, and then it didn't happen. In hindsight, it'll be like, wow, I wonder if there was just way too much passive investing going on because it wasn't, nobody was really taking a step back to think about what they were investing in. So we'll only know that in hindsight, and we'll find out hopefully in 2020. But the whole thing just seems like a mess.
Here's your end of the world. That was last year. I mean, like, this is like, right to the last day before we bounce.
Yeah, I mean, the end of 2018 was really scary. I remember that.
It was like, oh, overboard.
Yep. And then, QE back to the rescue. Yeah. And
Rip.
I mean, it's just really, really crazy to see. And
all
then,
bears need
now
to die. And then the retail money gets sucked in, and then we can have the final last hurrah. Which I don't know if it's now, but I feel like if we do a predictions episode, I don't even want to fucking talk about it. It's gonna be so bad. No matter what I predict, it won't matter. I'll be wrong, especially if it's a year-long prediction. I'll try, but it's not gonna be because it's hard like a year time frame. You could say this is gonna get to somewhere, and it might get there in 5 months, and then bounce and go up, halfway back up. So
Right. Right. You just never really know.
yeah,
Uh, I think I think another thing to talk about for the 2019 year in review that was really big was, and we kind of talked about it closer to the end of the year, were the central bank digital currencies. And you and I have kind of speculated that if the financial legacy financial system is starting to flail like it's on its last legs, if you are central banks around the world, what's your play? What moves do you have left outside of negative interest rates? And well, in my opinion, that's issue a digital currency, so that way you can just you can kind of ban cash, you can inflate the supply at will, and you can go from there. And I think, not that any countries actually launched successfully a central bank digital currency, but they started talking about it and mentioning it, and I think it will try to be normalized as we move forward in the future.
for sure. And I think it's easy to normalize it in a world like today because people already use like Cash App, Venmo, etc. in the U.S. and those things, And I don't know, I don't use Apple Pay or anything like that, but I'm sure people use Apple Pay. I wouldn't be surprised if people use Snapchat. There's dudes out there who pay for premium Snapchat. I'm not going to go into that, but I know there's a way to pay on Snapchat. So
No, yeah. I mean,
um,
and when you step back and think about it from like the U.S. standpoint,
we're behind. I feel
we're
like,
behind from like the Apple Pays and like WeChat and how everything's
yeah,
integrated
Alipay,
in China
yeah,
and other I guess more of the Asian countries. And I used to like get upset about that, but now I'm like, all right, like I used cash today to buy stuff at the farmers market, and I was like, I really want to start using more cash just to
yeah.
like fight back and
Remove your digital
like
footprint. No,
yeah,
it's
like it's
definitely
just it's not like to do anything quote unquote illegal. It's more just it's like the small business economy, and
it
the
really
cash
is.
the cash is important, and the cash is important because if you actually hold it, when we think about comparing it with like a digital money, or like when all money is just digital, I guess like you can't debase that, or you aren't subject to negative interest rates like holding all your money in the bank and being charged 1%, 2%, or whatever the negative interest rate gets to just hold your money. So we saw that where people in the European Union were putting like physical cash in safety deposit boxes because they didn't want the negative interest rates to hit them as much. So like you see people adjust to changes in regulation and manipulation of the interest rates.
Yeah, it's definitely a huge factor. Like I think we talked about it a few episodes ago, but it's like the overnight rate in the U.S., the Fed funds rate went from like 25 basis points at the sometime in like the middle of 2015 roughly to 250 basis points or January 2018. It sounds right, something like that.
Mm-hmm.
And so you don't think about it being much, but that means the cost of lending money just 10x. So what was
Right.
$100,000? I'm just using an easy number to 10x is now $1 million overnight. You know, and you think about that, and you can scale that up because the amount of money they're loaning is quite high. So
Right.
that probably is low in the low end, but I could be wrong.
Well,
But
yeah, your interest charges increase substantially,
oh yeah,
and it,
it
we've
doesn't
we've
seem
always
like
talked
much,
about
but
like
it is.
that like the contracting the money supply and expanding the money supply. When you look at it from an Austrian economics perspective, that's the cause of the boom and bust cycle. And I subscribe to that, and I think that's very accurate. We've seen it time and time again throughout history where the money supply is expanded and then it's contracted, there's a boom and bust, and then history kind of, and then the cycle continues, and you have these like long-term credit cycles where you just create too much credit, to a lot of misallocation of capital and malinvestment. All those businesses that aren't profitable run out of money because the cost of money increases as they raise interest rates, and then they realize, oh shit, we can't sustain this anymore, and then interest rates are cut, and you have the bust. So I think that's kind of, if you think about like Raoul Pal and that global macro perspective, everyone's kind of expecting this now. And when I say everyone, it's a tiny, tiny, tiny majority of people who are actually, kind of screaming from the hilltops, like, be careful, like credit cycle looks like it's coming to an end here. And then you have, CNBC or whoever else releasing articles like a recession's literally impossible because we have the tools to never let a recession happen again. And that's just like peak legacy financial system, in my
We'll
opinion.
never have a recession again. It's like, and like we're gonna look back on this in like 3 or 4 years, and like we're gonna laugh. It might not even be that long time. I think there's a lot of complacency right now, and I've only briefly watched CNBC a few times, but you see some of the headlines, and obviously the markets have just fucking steamed away for the last 3 months. I mean, we've really ran from that October 8th low. I mean, it's just or October whatever low, like 4th or whatever. We've just ran. I think it's almost like 15%. 12% in the Dow. I mean, it's a pretty hefty amount for 3 months.
Right. Right.
We'll see where that and we could go higher. Like I'm not even gonna fucking argue against it because
Right. I mean, you have to
it's
think there's still a lot of fuel left in the tank from a U.S. perspective. Like we aren't even at negative interest rates yet.
yeah we have
So how much longer can the show go on?
yeah.
Yeah, I don't know the
I'm not
answer to
gonna
that question.
yeah, and I
Yeah,
don't even
like
want to make a prediction because like when I look at this chart, I'm like, well, fuck, like it's just vertical. Like
yeah,
when we think about this is like perfect example. We can just compare this to Bitcoin because that's a good example. Like it's the same thing. Like in 2017, how much higher can it go?
right.
And that's the same thing to the Dow Jones here. How much higher can it fucking go before it just caves? Like I mean, it's not gonna go up forever. It's gonna have to go back to some kind of mean,
Right.
and that's gonna be painful. And the whole of the U.S. economy relies on it.
Yeah,
We're so financialized.
that's the
Everyone
scary
relies on
part.
it. Yeah, it's literally like everyone will be affected because a majority of people in the workforce have some kind of 401k, some kind of pension. Everyone is in the same ship together. So if it sinks, you're kind of fucked.
Right. Yeah, it's definitely scary. Uh, I guess the last thing I had on the list for 2019 was stock to flow went mainstream, and the analysis that Plan B did with stock to flow as a valuation mechanism for commodities, right? So, Plan B did his analysis and ran a linear regression on stock to flow and the prices of various commodities and showed that it had like a ridiculous 95% R squared, or in other words, the fit was damn near perfect. And like when I saw Joe Kernan on CNBC mentioning stock to flow with Bitcoin as like something to help evaluate Bitcoin and gold, it was like it was absolutely insane to see a mainstream commentator talk about stock to flow. And I was not expecting that to happen in 2019. I wouldn't expect to be talking about that with, an average person, or at least even hear about it on television. I thought it was absolutely insane.
Things are changing, man. Joe does his homework. It's interesting time because I think in the last few years the word fiat has been tossed around a lot more. A lot more
Bingo.
normies, including myself, because I was a normie and I don't think I am really anymore. But a lot of people, oh, fiat. But and I think so. Will people wake up to this? Are we going to go through some kind of weird revolution just across the population in general? Like you think just because of reading random stuff and running across history, like the idea of the printing press and just kind of opening people's minds to, because before that it was people like getting read the Bible from only a very select few in the clergy and whatever. So people were kind of screwed with by other people basically at that time in the 1500s and the 1400s and prior. And you think about, and then now the internet obviously is the big one because the internet has just the freedom of information just to spread like wildfire everywhere. In minutes, obviously in seconds, but like, things become big overnight. It doesn't take long, and something can gain a lot of momentum really quickly.
Yeah, I mean, I think you really nailed it. The internet is such an important tool for humanity, and I think a free market money is either more important or a very, very close second for the ability for people to communicate information with one another. And money is just right up there. And, I wanted to talk about this on the next episode, just, you know, the possibilities of having a free market money. And just like we had with the gold standard for many, 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 many years, that's where we're heading towards because of the lack of trust everyone has now in the legacy financial system. So you kind of they did this to themselves almost, or else you wouldn't need something like Bitcoin or even something like gold if they were just more prudent with the money.
Yeah, I agree. But it's hard because when you want to build an empire, it's easier just to make your money easy. And the same thing happened with the Germans in World War II. Like, they didn't anticipate going to war. Hitler and Mussolini did not want to go to war until 1943, and they went to war in 1939. Part of it was resources, and also they couldn't go on for much longer without capturing more territory. And I always find it funny, and I'm sure I've sent you the chart of the German DAX during World War II, like preceding it, and the chart's just ridiculous. And then eventually, like, the stock market gets paused in like July or August of 1944 when the war was really going south. And then just fucking like one day they finally open it up and it just drops down like 90%.
Yeah, that's absolutely insane.
And think about that. Like, people in Germany lost everything. In Europe in general, there's people just lost everything. Like, and that's a perfect case. Like, oh, your stock is illiquid. You can't do anything for like a year because the market is closed because there's a war going on. Like, we have it pretty good nowadays, one would say, over times like that. But it's just interesting to see, what free money allows. And I've mentioned it in numerous episodes before. When you look at the 20th century, which is 1900 to 1999, looking at the amount of war and just how easy it is when money is free and you can just lend.
Right. Exactly.
I mean, you can't even compare it. And I'm not saying that we haven't had war throughout history of all time, because humans have fought for a long time. But you look at the scale of it, and free money is definitely a big player in this. There's no way around it.
Right. It allows you to continue to misallocate capital for longer periods of time than you otherwise would. And I actually saw a little debate about this on whether or not, Bitcoin fixes war. Or in other words, does sound money make war less profitable? And in my opinion, it does. Maybe it's not the ultimate solution to war, but I think when the powers that be, for lack of a better term, are not or don't have the capability to expand the money supply in order to fund wars, and those things become less popular, it just becomes more difficult to do that. Or if you can do it, it happens for a much shorter period of time. And that's where I'm very optimistic on returning to a sound money standard, because I just think people are kind of pissed, and you can see the kind of unrest globally. Like, everyone's kind of had enough of this, and you can't fund this kind of stuff unless you control the money. And if you don't control the money, you can't fund it for that long. So that's where I get a lot more hopeful that, that kind of just terrible things will start to subside in the longer term. And I feel like we're kind of in the death throes of that, where we won't see that happen as much on a go forward basis, assuming that the planet can start to move again towards a sound money standard.
The planet, the human species.
Yeah, like it's funny because everybody's on the same team, whether they know it or not. You know what I mean?
No, it is the sad reality.
As a species, we're on the same exact team, and I understand.
We're on the same team, man.
People can hate each other and all this stuff, but people only really hate each other because of
resources.
A lot of people, money. People have co-opted the money and to do shit that's not great for their own personal gain, and it causes a lot of hatred. And I think if you remove that and you have a technical solution or a technology that doesn't allow money to be co-opted, it'll be more profitable to have peace and prosperity than to just go to war all the time. And that's the whole point. If you can make it more profitable to be peaceful, which I think that's what, kind of Bitcoin does, you just think about praxeology, and that's the logical move forward. Like, it's going to be more profitable to be peaceful, and that's the ultimate goal. If it's more profitable to go to war, you're going to do that. If it's more profitable to be peaceful, you're going to do that because everybody wants to make more money, right? Greed is good in this example.
Yeah, and
So
I feel like, not that war isn't the same as in the past with the resources. It's not as obvious as it used to be because it's just
right.
corporations doing it, and it's not obvious and it's not something talked about. But in the past, it was like, oh, we're going to go conquer this region because they have this, whether it's timber, whether it's gold, whether it's etc. It doesn't matter, and obviously it's changed now as we go into the future. Oil has become important, obviously, in the 20th century. Very important. You see militaries capturing oil fields in World War II. But, going forward, it's just the free money aspect. It just allows things to get way too drastic. And the perfect example is the U.S. during Vietnam. We were on a, $35 troy ounce gold standard through Vietnam until 1971. And Vietnam obviously was a huge cause to that. The fact that, in Vietnam, we're spending God knows how much over there. It's a money pit is what it is. And I hate to say it, but that's what it was. In terms of the resources going in there. I mean, the U.S. at peak time had over 500,000, soldiers over there. That's incredible. And there's a lot of other assets. And you just forget there's so much logistics to that. Think of how many MREs that is, ammunition, and then
it's expensive. Yeah.
Oh, it's so expensive. War is so expensive, and it's why we spent trillions in the Middle East since the beginning of 2001. It's absolutely insane how much money. I don't know how much it is to keep an aircraft carrier going. But it's a lot. Like a carrier fleet is just a shit ton of money. It's absurd, and people don't realize how expensive it is. And then you think, oh, the U.S. has 800 military bases outside the U.S. What?
Right.
It's like
sounds expensive to me.
Yeah, that's not like. And you think about it, when you're in other countries, we're paying for that land, almost always, unless there's some kind of weird, quid pro quo or something like, hey, you're protecting us, you can have this base for free, type of thing. But other than that, we want a base over here, we're paying for it.
Right.
So I think people really need to rethink, because we are at $23 trillion in debt, and it's not stopping. And the unfunded liabilities is over 200 trillion, which isn't even a number. I don't even know why we talk about that. We're a fifth of the way to 1 quadrillion in unfunded liabilities. Is $1,000 gonna be nothing when we're older? I really hope we don't get to that point. I don't think we'll be able to get to that point, because we're either gonna hyperinflate or we're gonna stop here.
Right.
I mean, I don't know. I can't see another decade of this shit. I really can't.
No, neither can I. And I think the fact that we can't see it continuing is the reason that we have the podcast.
Yeah.
Because
we can bitch about it.
Right. Yeah. It's fun to bitch about. It's fun to speculate on. And also, it's it can't go on forever. And
no, it doesn't.
It's starting to feel like it's coming to an end here. And that's the whole point, to kind of get the word out and have other people, I don't want to convince anybody, but for the people who do listen to the podcast, if they do take a step back and really think about it, I think they can kind of come to their own conclusions and see that, yeah, you're right. This doesn't really make sense. Why did we get off the gold standard? What does being able to control the money supply do, and who benefits, and why do they want to benefit from it? And it just leads to more questions and the things that we weren't taught in school, very much on purpose, in my opinion. And that's kind of it.
By the way, doesn't the repo thing end in 10 days? Is it the 15th?
It does end on the 15th. Yeah. Yep. So I think that's something that we should keep our eye on, for sure. Yeah. We think that's a good way to wrap up the 2019 year in review.
Well, yeah, I think it's a pretty good way to wrap it up there. I'm very scared about this predictions episode, to be honest, because I know it doesn't matter.
Yeah, me too. I think
it doesn't matter.
It'll be fun either way.
Because the thing that's crazy, and I don't mean to talk predictions now, but it's just again, things could change so drastically, so quickly that, and then again, we could keep going. There's no limit to this, so I'll leave us there. But if you enjoyed listening to episode 63,
64.
64. My apologies. 60.5, I highly recommend if you want to hear a shit talk about Bitcoin going up a lot in one day. But yeah, other than that, this was episode 64. I hope you enjoyed. Please give us a rating on Apple Podcast. It helps us infinitely. I saw we have like, I think 15 ratings now. It's either 15 or 12. But thank you very much, those who did it. Reviews help too, obviously. Share it if you think this is useful content or you just think we're a bunch of retards. I don't care. And then lastly, if you're on YouTube, please like and subscribe. It helps. And if you have any questions, DM us because we'd love to answer them. If you want us to talk about something random, sure, we'll give a shot at it. But preferably, crypto or market questions. But anything really, we'll shoot the shit about it. Thank you very much for listening.
Peace.
Peace.